Hi friends, in this video we will be discussing about engulfing pattern. Okay, it is a multi-candlestick pattern. So far we have discussed about the single candlestick patterns. A multi-candlestick pattern is something, if a pattern formed using more than one candle, then we say it as a multi-candlestick pattern. So engulfing pattern is one of the interesting multi-candlestick pattern. So we'll be discussing in detail about this. So engulfing pattern uses two candle friends. Let us try to discuss some of the important points regarding this pattern. To form engulfing pattern, it needs two candles. So if we try to analyze the meaning of engulf, we'll get to know what actually it is trying to do. Okay. Candle C2 should engulf candle C1. Now let us try to analyze this point friends. So imagine that this is a candle 1 and next candle is C2. Okay. Here if you see, candle C1 is engulfed by candle C2, correct? So what is meant by engulf? The meaning of engulf is something that covers completely. Okay. So if you see here, candle C2 tried to cover the entire candle of C1. Okay. So now can we say that C1 is engulfed by C2, correct? So this is the first rule that to satisfy an engulfing pattern, one candle should engulf the other candle. Alright. The main important thing about engulfing pattern is it should appear at bottom or top of the trend. Okay. So depending upon where actually it appears, we term it as bullish engulfing pattern and a bearish engulfing pattern. So we'll be discussing in detail about those two patterns in the next slide. Okay. So I hope you understood here. The basic point about engulfing pattern is candle C2 should engulf candle C1. Okay. Alright. Now let us try to analyze bullish engulfing pattern. Okay. So let us try to understand some of the important points about it. So to satisfy this bullish engulfing pattern, the previous trend should be a downtrend. Okay. Now the another important point. So here if you see, candle C1 should be red, which confirms bearishness, and candle C2 should be a green one. Okay. Now let us try to analyze this point friends. If you see, the previous trend is a downtrend, rule 1 satisfied. Okay. So when we say a trend is a downtrend friends, so whenever market opens lower compared to the previous day's close and again closes with the lower to form a new low. Okay. So this is what it is indicating during the downtrend, correct? Now to confirm the bearishness, if you see the candle C1, okay, let us assume that this is a candle C1 and this candle has closed with a new low, correct, which indicates that the market is in completely controlled by the bears. If we clearly notice the candle C2, so candle C2 also opened lower compared to the previous day's close. Since the bears are in absolute control over the market, they try to bring down the stock to lower levels, but what actually happened at this price point, buyers came into the market and they tried to push the stock to higher levels and they made it to close to form a new high in the trading session. Okay, so if you see this pattern, the previous trend is a downtrend and candle C1 is a bearish candle and candle C2 a strong bullish candle which engulfs the previous candle, correct? So this is how a bullish engulfing pattern looks like friends. Okay, so the first rule is the previous trend should be a downtrend and bullish candle should engulf the bearish candle, and thereafter if you see there is a trend reversal and the market moved towards the upside. So now if I want to take a position based on this bullish engulfing pattern, my buy price should be the close price of candle C2 and keeping my SL as low of the C2 candle. Okay, C2 or ideally this is how a perfect bullish engulfing pattern should look like, but on the chart sometimes even the candle C1 might have long lower shadow. Okay, so whichever the candle is having the low price, so that could be acted as a stop loss. So this is how one can trade based on bullish engulfing pattern. So this should form at the bottom of a downtrend. Okay, so this is about bullish engulfing pattern. Now let us try to understand a bearish engulfing pattern. So this is quite opposite to what we have discussed in the bullish engulfing pattern. Let us try to understand some important points. So again, the previous trend should be an uptrend. Now here if you see, so this is a candle C1, okay, and this is a candle C2. Now if you see, the first rule is the previous trend should be an uptrend where everyday market opens with a higher compared to the previous day's close and again closes with a higher to form a new high. Okay, so here also the same thing it reflects. C1 opened higher compared to the previous day's close, which indicates buyers are in absolute control. And if we look at C2, so candle C2 is engulfed candle C1, correct? So if you see, the real body of C1 is covered by real body of C2, then we say it is a bearish engulfing pattern. At this price point, okay, so bears entered into the market and they try to pull down the stock to downside, which results in a trend reversal. Okay, and thereafter market continue to fall. So if I want to take trade based on this bearish engulfing pattern, so I'll try to short at candle C2 close price. Okay, so here if you see, this is a C2 closing price. If I short a stock at this price point, assuming that the market falls, and my SL should be the highest high between a candle C1 and C2. Okay, so this is how we can trade using a bearish engulfing pattern. So the previous trend should be an uptrend, which indicates buyers are in absolute control, and at this price point bears entered into the market and try to break the trend and results in a trend reversal. So this is about a bearish engulfing pattern. So whenever we see a bearish engulfing pattern at the top of an uptrend, one can short the market. So I hope you understood about bullish engulfing pattern and bearish engulfing pattern. Alright friends, so now we are in a trading view platform. Now let's try to find out the engulfing patterns on the chart. Okay, so I have taken Nifty chart here and I have applied a 1-day time frame. Okay, so here if you see, it is a clear uptrend, correct, where bulls are in absolute control over the market. And at this price point, what actually happened friends? So if you see, here is a candle C1 which is again a bullish candle. So at candle C2 what happened? So at this price point bears entered into the market and they try to break the trend. So if you see, here is a bearish engulfing pattern, correct? So the previous candle is a bullish candle and the next candle is a bearish candle which engulfs previous candle, correct? So if you understand the chart here, in the previous trading sessions, bulls are in absolute control of the market and they try to take the market to higher levels. Okay, and here the strength of the bulls become weak and bears came into the market with a full force and they try to break the trend, and here is what happens in the next couple of trading sessions, right? There is a trend reversal and the market fell. So if you see, the engulfing pattern has formed at the top of an uptrend. Okay, always it is important, if the engulfing pattern is getting formed at the support or resistance levels. Okay, so if you see here, so earlier the price has reacted as this zone and here also there is some resistance level and here also it is a clear resistance, correct? So if I want to take a trade based on this pattern, so what I will do friends, at this closing price of candle C2, I'll try to short the market at this price point and keeping my SL as a high of the candle. Okay. If you try to calculate here, my stop loss is around like 1.5% approximately. Now let us try to look at the target which we can get is almost 6% if I have short the market at that level, correct? It's a decent trade which is almost like 1 is to 4 ratio. Yeah, if market reverts at any price point during the fall, one can trial their stop loss and can exit from the trade. Okay, so this is about a bearish engulfing pattern on the chart of Nifty. Now let us try to find some of the other patterns. All right. So here also, friends, if you see, the previous trend is an uptrend, correct? Where bulls are in absolute control over the market. And here, if you see at this price point, what actually happened? There is a bearish candle formation which engulfs the previous bullish candle, correct? Which clearly indicates again a bearish engulfing pattern. But what actually happens? It given a false signal, and even from the next trading session onwards, the market has shooted up and it continued its trend. It's just a small consolidation at this price point, so the market continued its momentum towards upside. So here if I take a trade based on bearish engulfing pattern, so my stop loss is high of the candle, so at this level so it will hit the stop loss. Okay, so this is a false signal, right? So there is no pattern or any technical indicator, friends, which gives you 100% result. Okay, it's all about the probability. So to get a better probability in trading, so it's always recommended to use this candlestick pattern in conjunction with any other technical indicators like moving average or MACD. Now let us try to find this engulfing patterns in stocks as well. So let me apply HCL stock. So now let's figure out engulfing patterns on the HCL chart, friends. Okay. So here, if you see, so HCL stock is in downtrend in the previous trading sessions. So what actually happened? So if you look at this pattern, there is a bearish candle. Okay. So after that, there is a strong bullish candle, which indicates that bulls emerged into the market at this price point. Okay, and they tried to break the trend and take the market to higher levels. Okay, so if you see here, this is a bullish engulfing pattern, correct? So if I would have taken trade here, I'll be taking my position at closing price of this bullish candle, keeping my SLS somewhere at this level. Okay, so if we calculate, my SL is somewhere around 4% of this stock approximately, and if you see the target which I can achieve is almost 20%. So there is a strong resistance at this point, price point, where we can interpret that there could be a possible resistance at this level. Okay, so one can look for a target of this level, and if there is any trend reversal, we can have a trailing stop loss and can exit from the stock. Now let us try to find out some other patterns on HCL stock. So here if you see, there is a previous uptrend here. Okay, at this price point, what actually happened, friends? The previous candle is a bullish candle, and here we could see a bearish candle, correct? So the previous trend shows that buyers are in control, and at this price point we could see there is a selling at this level, correct? Which again resulted in a strong downward rally. Okay, engulfing pattern gives a good risk reward ratio if we execute the trade at the right levels. Okay, so always it is important to find these engulfing patterns at uh, support and resistance levels, so that there is a good probability that a trade will work in our favor, friends. Okay, so even if the trade goes against our prediction, So we'll just exit with a small amount of loss. Okay, but if the trade goes in our favor, definitely we'll have a decent result. So that's all about engulfing patterns, friends. Thank you.